So one other issue that is on the front burner now is that announcement of, intervention, would I say, of the central bank between Unity Bank and Providence Bank. And a lot of questions are being asked. Why was Heritage Bank not saved? Why now do we have the 700 billion intervention from the central bank and this merger between Unity Bank and Providence Bank? Let's talk about this. Perhaps Professor Kenife has some background story for us to help us understand the objectivity behind this development. Economist joins us virtually from Enugu. Professor Kenife, thank you so much. Good afternoon.
Oh, thank you for having me.
So I don't know if you could help us answer some of these questions, because people are asking why Heritage Bank wasn't saved and now it seems Unity Bank is getting saved.
Oh, I think there are two different situations, to be honest, and they're not actually comparing like to like. The issue of Heritage Bank is, first of all, central bank has two core mandates. One is the price stability, and of course, is an overarching mandate that it sets all those prices, and there are things that are prices, inflation is price, NPR rate is price, and all of those price mechanisms are things that central bank will have to act on and attenuate as the situation demands. Now, the second one is financial system stability. The central bank is a regulatory agency, it regulates those banks, and one of the instruments that it uses is prudential guidelines. And those prudential guidelines are based on risk-based banking supervision. And it tends to do that with NDIC because both of them are sharing the risks involved in those. So they go around, there are so many things in their list. They have things like non-performing loans, they have capital adequacy ratios, they also have things like cost to income ratios, so many ratios that they look through to enable them gauge the health of the financial institution, and they actually advise them. In some cases, they intervene, and it depends. So the cases are different. The case of Heritage Bank has been one of persistent financial performance decline over the years. And the central bank didn't sit back and watch them fail. No, it actively interacted with them to the extent that in some cases, it had to approve the removal of some of the staff that they felt were partly responsible for the collapse in the system. They also had to grant financial accommodation to the bank at some stage. And even notwithstanding those, it even had brought them back into the clearinghouse October last year. But that all of these measures didn't quite save the day. So I think central bank's hands got tied to the point that they just had to let it go. But before central bank makes this decision, it has to look at in great detail the issue. What can this potential impact be on the financial system stability? Now, that is something that it looks into very deeply, because you don't want to take an action that will disrupt the entire financial system or cause such a upheaval or even contagion effects and all kinds of damaging the confidence of the investors and all of that. So it has to look very carefully and weigh those very, very carefully before it takes that decision. And in the case of this, the case of Heritage Bank, I think the patience of the central bank was exhausted. And in fact, let's even look at one of them, capital adequacy ratio. International banks have a capital adequacy ratio of 15%. The national banks have 10%. And in the case of the bank, to even satisfy they've been on negative territory on the capital adequacy ratio, which ought to be about 10%. They've been on negative territory. And to actually bring them to reach sustainable levels would actually require an injection of 1.33 trillion naira. That is staggering. So you can see the depth of that challenge. So I think central bank got pushed to the end, that it decided that it just couldn't salvage it. And not that major options came forward. There was no options like, oh, can we merge with another bank? Can we have a takeover? Those ones, the merge didn't appear on the horizon, as far as I know. But when you come to the case of Unity Bank, it's a slightly different scenario. They have had their challenges. They have, but you have a case where a Unity Bank that had 3 million customers and also have 230 branches was offering the opportunity to merge with another bank, which is a digital bank in a very smaller number, 300,000 and very few branches, 14, but it's very heavy on digital technology. So the bank looked at the combination, what was being offered, and felt more confident that if they decided to intervene, it will not be an intervention in vain, that there are clear prospects that they could recoup. And even in the terms offered to them, they are very confident that they would be able to recover the money that they are putting there. But again, the bank had to come to those parameters of financial system stability to be able to weigh this very carefully. So we had to look at how systemic is the challenge that Unity Bank poses. If you look at Unity Bank, it's a national bank, by the way, but it is a stronger regional bank in the sense that most of the states in the north is their first bank. So it's heavily exposed to the northern states. And also, they are very heavy on financial inclusion in the sense that if you have a huge section of our community that are engaged by that bank in the area of financial inclusion, and you have so many exposures, so many financial institutions are going to crash, and there will be all kinds of things. So they have to weigh that very carefully and then find out that it is actually, rather than save us that embarrassment, they have to sustain this. But don't forget that this is not a decision of this bank this year. It has already been decided in the previous administration, and they were recommended and accepted 800 billion package. But it is in this administration, they have to reconsider all of that and then decided to take it down to about 700 billion and then consider all of these issues that I'm now raising about the systemic nature of this particular intervention. So they have to look at that very, very carefully.
So I think the other question would be, we know that Unity Bank is listed on the NGX, Providence Bank is not. We know they are aiming to have a new name, a new identity. I wonder where that leaves the depositors as well as investors in Unity Bank, especially on the exchange.
Well, I'm not sure about that, but I have to say that I can only talk about what I have on my business. I think that you can't actually compare both of them, because the central bank is fixated on financial performance and the potential damage that could be done to financial instability if they were not to respond positively to the option offered by the Unity Bank, Providence Bank option. And I think that is reasonable.
All right, Professor Ike, thank you so much. Of course, we'll be watching the space to see what they come up with. But of course, the security of depositors, I think NDIC, as you said, is working with them. So depositors and investors should be safe going by, what we've been told so far. Thank you so much for sharing your time.
Thank you very much. I think the majority are being settled as we speak by the NDIC. And I don't think there are...
That's for Heritage Bank.
No, I'm saying that the Heritage Bank, the depositors have been settled. About a huge majority of the depositors have actually been attended to. They have been disbursed actually by the NDIC. And we are very hopeful that there will not be any failure in that respect.
Yes, thank you. Thank you so much, Professor Kenife. Yes, the NDIC did say that about 82%, I think, of deposits have been. But thank you so much for your time and do enjoy yourself in Enugu.